Ladies and gentlemen, welcome to the most exciting panel discussion of the EFF 2025. Our session promises to be one that is riveting, thought-provoking, and I'm going to challenge these guys quite a bit. My name is MARLON RAWLINS, and chairing this panel is extremely personal to me, having spent the last 3 years working with the NB very closely on the financial sector reform. So what we have heard from the first panel, they've used the word unprecedented several times to refer to the macroeconomic challenges that Ethiopia has been facing. As a result of that, there was a unique opportunity for the financial sector to respond in a similar way. And as the governor mentioned, the bedrock of the economy really is making sure you have a financial sector that is fit for purpose to be able to support the economic growth of Ethiopia. We fast forward, of course, you need to have a central bank that is equally fit for purpose and a regulatory framework that not only engenders stability, but one that certainly promotes growth in the financial sector. So, of course, I have a very exciting and diverse panel here. FREZER, who was neck deep in these reforms, got his sleeves rolled up. So we will hear from the regulatory front lines how this unfolded. We have, of course, Dr. EMEBET from the Development Bank of Ethiopia, who will really bring the other side of the coin, being on the receiving end of the rapid changes in the financial sector and what changes in the regulation and how she went about navigating her institution in terms of implementing this. Then we have BACHAR, who, a colleague, spent many years at the International Financial Corporation, the World Bank Group, really working across more than 100 countries, supporting the banking sector. And of course, we could not have rounded out the panel without bringing someone else from the private sector. We have our colleague, DEVON, who has been on the front lines of customer due diligence and KYC. So I'm going to be asking him a couple of questions about how best we navigate this. So just to kick off, Dr. EMEBET, what we've been hearing, from a regulatory perspective, we had to really respond. The NB had to respond with pace and speed to ensure that the financial sector regulatory framework was adept to taking the economy forward. What did that mean for you from a practitioner's perspective, the pace and the speed? What was your feeling, and how have you been coping with implementing the rapid changes?
Thank you, Marlon, and thank you, the organizers, for giving me this chance to attend this as a panelist. So I think you start your question from the toughest part. Maybe with regard to have learned a lot from the previous presentation from the governor, His Excellency, and also even we have get more experience on what really means the financial sector reform in the past 3-4 years for the Ethiopian banking sector at large. From the point of implementation, the pace for the implementers from the bank side, in fact, the pace is somehow seems tough because we are undergoing so many reform agendas in the financial sectors within a short period of time. So we need to implement so many regulatory requirements within a short period of time, so that it will brought us we need to comply in every aspect, otherwise we'll be penalized. We need to do things in a safest way as a banker, so it will create more tension from the bank side. In fact, we acknowledge that, we should acknowledge that we are just doing our backlogs for the previous years. So in order to clear the backlogs, we have to work more within a shorter period of time. Additional, more work has to be done. So we understand for the implementers, the pace of the central banks, they are demanding us to implement. In fact, as you heard from the previous presentation, which Mr. FREZER has undertaken, within a year, we have got 6 new directives, which all we need to implement. In fact, they have all their own grace periods. Even though they have their own grace periods, implementation periods, we all understand we need to start from now. That is basically As to me, when I was leading at NIB Bank before joining DBE, and also when I'm here, we need to be the first all the time. We don't need even to wait for a long to implement all things. So this is what happens based on, as regard to the pace of the implementation.
Oh, fantastic. It sounds like you're looking at this as an opportunity to gain a sustained competitive advantage and seeing it as a business imperative, notwithstanding the high regulatory compliance and the burden that it brings. So I think that is definitely a good perspective on how to approach it. I just want to peel the onion a bit on this because FREZER mentioned a couple of the key reforms that focused quite a bit on things like strengthening governance, strengthening risk management, making sure your board of the financial institutions have independent directors. How have you seen, what is your impression of this on the positive side? How has this really impacted your risk culture internal to the DBE?
In fact, when we see the content of the regulatory changes and the directives, most of them will support the implementers, not the central bank. Indirectly, when they support the implementers, the banks, basically we mean that it will support the economy at large. It will support the stakeholders, which means it will strengthen the risk management capacity of the institutions, the banks. And also it will add value for us to learn from the best practices. We understand all the banks has to abide by the Basel Accords, Basel I, Basel II, Basel III. Without having such kind of strong regulatory framework and also without having such kind of review framework, monitoring framework, we can't 100% implement those accords. It means indirectly we need to have sufficient level of capital. We need to have sufficient level of liquidity position. We need to have robust internal system as a bank. So when we design our strategy, we need to consider what are the emerging issues. If you have got the chance to see the vision of our local banks operating in Ethiopia, most of their vision is either to be the first or the second in the regional bank or to be the best, the world-class commercial bank or development bank. Both the Development Bank of Ethiopia and the Commercial Bank of Ethiopia, the most largest government-owned banks, even have to make them at the level of world-class commercial banks and DeFi. So in order to behave ourselves, to bar ourselves with those banks, we need to start implementing in a toughest way those best practices. So this is an opportunity for us to have more risk management capacity and to have an opportunity to create a learning path. Basically, in order to have more robust internal system, we need to have adequate human capacity, not in terms of numbers, in quantity, but in quality. We need to focus to recruit more professional individuals, professional bankers in our sites. That is what about in the corporate framework, that's the thing which these directives are saying.
Fantastic.
Thank you.
Thank you so much. Quickly, just to pivot to BACHAR, just to give us your view from the international flavor. Having worked in many countries around the world, what we have seen in Ethiopia, I'm sure it took you decades in your career to see such an immaculate transformation of the financial sector and the speed and pace at which the regulatory architecture has been changing. What are some of the lessons you have learned, or what in other countries that you think could be brought to bear to guide us as we go forward?
Thank you. I think one of the most critical success key factor in banking reforms and liberalizing the market is preparation. If we look back at Asia, if we look back at Latin America or Russia or Eastern Europe, we see that liberalization came in relatively quite fast. But more importantly, the regulation, the banking supervision, the risk management the banking regulation and supervision came in afterward. It either came in following a crisis or it came in following an adverse impact. So one of the major, I would say, one of the benefits that we have in Ethiopia here is that, well, there is a need to do a reform. There is not a very immediate requirement to implement them right away, which meant, as His Excellency the Governor mentioned this morning, there was time to do preparation, there was time to have alignment amongst the different parties, and there's a time which is sequencing, for sequencing. And for sequencing, I would say, if we are to take the first lesson that happened in the other markets, is that liberalization should follow bank supervision, bank regulation, reforms, and that would be the most important part in it. Some countries have done it fast, some countries have done it slowly. And if you look at Asia, for example, you look at Korea as an example, they were extremely fast in implementing a relatively high standard of bank supervision, while Japan took a bit longer time. And the difference between the two was the alignment of the party that was discussed early this morning. So that's the first one that I will look at is the bank supervision and bank regulation that will come in as the first part that I would look at. The second part that would be needed is how to prepare the domestic banking sector for the competition. And what I mean preparing them is preparing them for both. One is preparing them to compete independently with the foreign banks as they move in, or how to prepare them to be a JV or to be partner with the foreign banks when the foreign banks are coming in to put in there. That's something that means, and that again referred to my colleague mentioning earlier on, the need to build up that risk management, to build up the internal thing. Human capital tend to be usually the largest gap, when looking at these reforms. It's not the quantity, it's the quality, and that takes time to build up these experience. Now, the cooperation that we see with the IMF, with the World Bank, and with all multinational IFC and so on, obviously can help promote these things into a more better capacity. The third one will be the alignment of the foreign investors with the national interest and with the national banking needs. In that regard, the foreign investors are going to come in with a lot of good innovation. You're going to have energy innovation, risk management, customer service, products, digital, and so on. But it's important to see how these transfer of expertise can go to the domestic banks as well. Equally, it's important to ensure that there is adequate supervision to make sure that you don't get a new product that are not in line or they can make the system a bit more vulnerable. If we look at Europe, for example, if you look at Poland as an example, or Greece, the European Bank brought a new product that did not fit in with the local market, and that caused certain things. So therefore, again, we go back to the proactive bank supervision in there. And the final one, I would say, there's always a need to build buffers. Buffers in terms of capital, buffers in terms of liquidity. We always refer to meeting Basel requirement, whether it's Basel 1, 2, 3. But again, if we look back, Basel 3 was only half implemented because the major part of it, the risk-weighted assets, are only coming in now. And some of the countries that went through these banking reforms and went through crisis as well, if we look at them today, you will find that they way exceed the Basel requirement. And the reason why they way exceed the Basel requirement is purely for the buffers. Liberalization, banking reforms, will lead to a high, rapid increase of credit growth. I mean, that's one of the things that is expected. But the rapid increase of credit is always can create certain volatility in the market. And that's the need in that case to make sure that there is enough additional buffers to be put in there just in case. Hopefully we will not need it, but just in case.
Okay, thank you so much, Bachar. Just do a quick follow-up for you. In terms of Ethiopia's attempt to make sure the regulatory and supervisory framework is in line with international best practice, is there any room for it to take into consideration proportionality and the context of Ethiopia? How do we balance the two?
I think what we have here is that you cannot have the sudden jump. So therefore, I go back again to the sequencing, the idea of you need to tailor it by bank size. You cannot have a regulation that applies to everybody in one go. I mean, some are stronger than the others. Equally, there's a need for a lot of support from the supervisor, but equally support from other, whether it's consultant or otherwise. And at the end of the day, it's making sure that the domestic market, is prepared for that competition going forward.
Okay, thank you so much. So Devon, we will come to you. So we have been talking quite a bit about financial stability and how we maintain these risks. And of course, as Ethiopia embarks on opening the banking sector, there will be new and emerging risks. One such risk that, of course, every international financial center is concerned with is the risk of integrity. How do we treat with anti-money laundering, counter-terrorist financing? And how do we ensure, as we achieve stability, we don't retreat because our financial sectors lacks integrity? So I just wanted to dig a bit deeper from you to tell us a bit about, in particular, also the objective of achieving financial inclusion. How do we help to manage, to bring the underserved into the community while, of course, maintaining the integrity of the system?
So that was a very loaded question, Marlon. So I'll try and answer all those things in one. But as we kind of think about some of the directives that we talked earlier with regards to the Basel Accords, the FATF recommendations, et cetera, a lot of those are tailored around risk management. And one of the biggest components of risk management is customer due diligence. It's who you let into your banking ecosystem that ultimately are the people that are transferring money, participating in the ecosystem as a whole, and funneling and fueling the economy on a more broader basis. And so when we think about customer due diligence, that's usually the number one way to prevent bad actors from laundering money through your system or from providing terrorism financing. And so one of the big things that we've thought about, kind of in some of the other markets that I work in, is how do you use digital solutions to kind of foster the innovation that is happening across the broader economy. And so what we heard about earlier today was that digitization is a major priority for the National Bank of Ethiopia. Things like micro lending, digital lending, cross-border payments, as well as mobile money and mobile remittances. And when you do those things, you're often doing those in a very fast-moving environment. So people are getting onboarded to those platforms and systems in a matter of minutes versus the traditional banking sector, which could take weeks to onboard a single customer, right? Because there's a lot of manual processes associated with that. And so one of the biggest reforms that needs to happen is there needs to be an infrastructure for customer due diligence that can be built on things like the FATA National ID program. You can leverage that, which collects 8 or 9 data sets that all Ethiopians who receive an identification card can then leverage to onboard to mobile money companies, banks, micro-lending platforms, et cetera. You can leverage that to then build other ancillary products offerings and make it more of a collaborative experience amongst the national bank as well as some of the private sector banks. I think another thing that we see most commonly is across the institutions and the countries that kind of enact certain policies across the FATF frameworks and recommendations, as well as the Basel Accords, is enforcement is usually the piece that's lacking the most, right? So if you look at the gray list for FATF, there's 25 countries on the gray list, 50% of them are from Africa. And every single one of the African countries is on that gray list because they do not enforce AML and CFT in a proper manner or fashion. So one of the recommendations that I have for Ethiopia as a whole is to increase funding to the FIS, which is the Financial Intelligence Service, which actually monitors some of the transactions that are occurring within the ecosystem to flag them for fraud or nefarious activities. I think that something like that would be a very interesting opportunity for Ethiopia to eradicate some of the AML concerns that many folks have. I think another interesting opportunity is to do risk-based supervision. So there's risk-based kind of customer due diligence that happens when someone's onboarded to an organization. Someone that's getting a checking or a savings account is very different than someone who's getting a mortgage or a loan of some sort. And so there's different risk criteria and thresholds for low, medium, high risk customers. There's PEPs, there's all kinds of different regulations that come into play here. And so if Ethiopia is able to enact a risk-based KYC and customer diligence system that mandates certain requirements for certain levels of risk for individuals, you can also see a reduction in AML and terrorism financing as well. And then lastly, I think interagency collaboration is very important. There are multiple agencies that are responsible for collecting data on individuals, on corporations, and the like, which are ultimately then fueling the financial system when people are onboarding for bank accounts or different products. And so if there's interagency collaboration, which can be built on kind of a digital infrastructure using the FADA National ID program, I think there's a real opportunity here to make the ecosystem more inclusive on a broader basis, but also make it more safe and interesting for external and foreign investors.
Thank you so much, Devon. FREZER, very startling statistics. 14 of our African countries are on the gray list. And from a regulatory perspective, can you just give us some insight in terms of NBE's focus on integrity going forward? I am aware that Ethiopia is currently the chair of the Eastern and Southern Anti-Money Laundering Group. So if you could just share the NBE's focus on anti-money laundering and CFT risk. Thanks.
Thank you, Marlon, for that question. So when it comes to integrity, I think the very basic principle is that, the financial system shouldn't be an instrumentality for making, crime, right? So it has to be safeguarded and protected from being abused by, criminals. So that is a basic, foundation of the principle of integrity. So the next question is, how are you going to address it, right? So from the perspective or in the context of Ethiopia, we don't have as such a big issue in terms of the legal and institutional framework, right? So all the basic legal and institutional frameworks are there already. So what needs to be done is in terms of effectiveness. So we have to make sure that these legal frameworks that are meant to combat money laundering, terrorist financing, and proliferation are really working and delivering results. So that has to be the real exercise for us. And even if you see it like in the context of Africa, for the most part, the real issue is not really having the legal infrastructure in place, but what boils down is to what extent is this legal and institutional framework being implemented and also being effective and also being able to prevent and also to enforce legal frameworks to addressing this risk. So from that angle, I think the financial sector as a whole and the banking system in particular has to really work in terms of enhancing their resilience when it comes to protecting the integrity of the financial system. Otherwise we will be running a risk of being grey listed, and that means that we will not be in a position to work with international banks and also other actors, and that will be causing a real trouble not just to the financial institutions but also to the financial system and the broader economy.
Thank you so much, Fraser. Excellent point. Devon, just to come back to you, staying on the point about financial inclusion. So in keeping with the economic homegrown program here in Ethiopia, it's one of the key priorities. So there has been quite a bit of efforts geared towards bringing the underserved and the underserved into their economy. What has your experience been about not casting a broad brush and using a more risk-based approach to risks like AML, CFT? And how has the use of technology like AI and digitization helps in that regard? How do we make sure even our fintechs that we're able to manage that proportionally? Thanks.
Yeah, so I think one of the points that I made earlier was around kind of tiered KYC requirements or verification requirements. So for low, medium, and high-risk individuals, there are different requirements. You should probably do the same thing for rural populations versus urban populations. More generally speaking, rural populations have access to more documentation that's required to onboard to mobile money platforms, to banks, etc. Whereas rural populations might not have the same access. And so therefore there should be different regulation around that population versus the urban population. So one of the things that we do a lot in West Africa, in Nigeria and Ghana, where we spend a lot of our time, is we help the central banks in those respective countries reissue eKYC policies and platforms that kind of tailor towards some of these challenges that you're seeing on customer due diligence and onboarding. And so some of the things that you can do are digital address verification. So one of the big problems is that standardized addressing is not very common across the continent. There are other solutions that you can use, like geolocation services on smartphones, to run different AI-led models to confirm whether someone lives where they say they live and works where they say they work. You can do things like biometric verification from a smart device versus from an in-person branch of a bank. And so now that people have access to smartphones and smartphone adoption and penetration is increasing across the continent, you're seeing more and more folks doing digital verification on their smartphone from the comfort of their home. That's another opportunity for expansion and inclusion, especially for folks who can't get to a branch because they don't live close to their local branch or bank. The last thing that I think is super interesting is AI-based tools for fraud monitoring and prevention. So kind of customer due diligence and KYC is the first step of the equation, which is when they get into the financial ecosystem. Once they're in the ecosystem, it's still the duty of the national bank and of the banks themselves to actually regulate and monitor the transactions that are occurring. And so there are AI-based fraud monitoring tools now that can detect irregular transactions, nefarious transactions, and all those good things, which can then be flagged to organizations like the FIS internally and can lead to further investigation and follow-ups within Ethiopia. And so I think really just setting a clear compliance standard and framework for different populations, different organizations, whether it's a mobile money company, mobile wallet company, a bureau of change, or a traditional bank, you have to have these policies in place in order to facilitate financial inclusion and broaden the scope of the economy.
Sounds like you're ready to put Governor Mamo's regulatory sandbox to use.
If he lets me.
As we wrap up, this has been an exciting discussion. I'm going to give you each 1 minute, actually half of a minute, to do an elevator pitch on why the Ethiopia financial sector. So let's say you run into someone in the elevator in Dubai and you needed to convince them to come to Ethiopia to invest. 1 minute. Starting with you, Dr. EMEBET.
In fact, we have so many opportunities here, the untapped opportunities. So far, most of the banking products and services are somehow homogeneous. So it will give for the foreign banks to invest in Ethiopia a huge investment to beat the market and also to tap the untapped opportunity and utilize from it. That's the biggest thing. And also we have a huge population size, close to 130 million population size, of which the majority is the young population. So the next generation usually demands to have digital banking system. Most of the international banks are having expertise on the digital banking. So it will give them a huge opportunity to increase their market size and profitability. So I luckily or happily invite the foreign investors, the foreign banks to invest here in Ethiopia, come here, and we are very happy to collaborate with them. We are not, in fact, afraid of competing with them. We will also take it as an opportunity to leverage our capacity and our internal processes.
Thank you so much. The regulator sales pitch, what would yours be, Fraser?
Okay, I think from the regulator's perspective, I do think that now we have a very good and favorable macroeconomic policy already in place that this will further be strengthened and in going forward. So that's one thing. And the second thing is the market size. So this is a big country, a big economy in terms of GDP, and if you see the population demography, this is a country where we are seeing, 800 babies every day. So you can imagine like the potential that this country can provide. And the other thing is, over the past years, we have significantly improved in terms of, ease of doing business. So if you see like the very recent, initiatives that have been, taking place, at government level, like the one-stop service and everything. So every intervention is geared towards making business to be easy and feasible in our context. So that should really attract the foreign investors going forward.
Devon, thank you, Fraser.
I've been talking about Ethiopia for a while in terms of an opportunity for me being on the private side. I think some of the things that were just mentioned, you've got a population of 130 million people, the majority of which are under the age of 40 years old, right? So naturally, there's going to be a digitization opportunity here in the market as it pertains to banking, financial services, telecommunications, all kinds of industries, right? And with that comes opportunities for innovation, but also for expansion across multiple sectors. And so I think outside of just the banking sector as a whole, for my company on the private side, as it pertains to customer due diligence and customer onboarding, we think the opportunity is massive. One of the other things that we also were reading recently is that folks that have access to credit is really low in Ethiopia as a comparison to other markets across the globe. And so with these new financial lending products and financial services products that are becoming available in a digital format, there's going to be an opportunity for us to continue to verify some of these individuals and do more consistent monitoring as it pertains to preventing money laundering, terrorist financing, and things of that nature. So I think there's a massive opportunity here, and it's one of the untapped markets, in my opinion, as it pertains to the continent, especially for one of this size.
Thank you. I would like to echo again my colleague's comment. I think the banking reforms will help to unlock these untapped potential that we have at the moment. I mean, there is a lot of potential in the market, but what makes it a bit more exciting, I would say, is the fact that it's currently well planned, well aligned. The parties are well aligned, and there's a unity in terms of objective and in terms of implementation, which does provide, the keys for a successful banking reform.
Ladies and gentlemen, we have come to the end of our exciting planning. I hope that we lived up to your expectation and our promise. And at the end, I understand there's going to be a vote for the best panel. So remember, we are panel number 2. So when the poll goes up, please vote for us. And, obviously 45 minutes is never enough to fully embrace the magnitude, scope, and scale of what the Ethiopia financial sector is going through. I understand from the organizers as well, you could always channel your questions to them. Sorry, we weren't able to take any questions, but certainly it requires an all-hands-on-deck approach. And I think based on the presence of all of you, it's an indication we're on the right track. Thank you so much and enjoy the rest of the forum.